So is subsidy silently back as being widely reported? That's the big question on the program today. Recall that the Nigerian National Petroleum Company Limited Group Managing Director Mele Kyari indicated earlier in the year that market forces were to be blamed for the abrupt increase in the price of premium motor spirit. Ipman has also been talking about other factors, including the price of fuel on the at the international market vis-a-vis foreign exchange and the reality of our economy that now determine the price of the commodity. I'm joined now by CEO Economic Associate Dr. Teriba to help us better understand this new development. Thank you for joining us on the program. What do you make of President Tinubu's assurance the pump price of petrol will not be increased?
Okay, thank you very much, Nifemi. Good evening. Right. We are confronting the major realities of the Nigerian economic situation, and the president should be commended for taking the bulls by the horns. Subsidy is a major issue. Unifying the exchange rate is a major issue. But we now have to deal with the backlash of these two positive policy developments. Now, subsidy is directly related to the unification of the exchange rate. If we had a situation after unification where the exchange rate strengthened, pump prices will fall. But the situation we have on our hands is that since the unification, the exchange rate has more or less doubled. What you need to part with against the dollar is twice in the official market in the private market, what you were parting with before 2 months ago when we unified the markets. And once exchange rate moves, pump prices must move. And if pump prices don't move, subsidy is back. So those who are saying subsidy is back, they are right.
But in the same breath, Dr. Teriba, in the same breath, the special advisor to the president yesterday was clear about the deregulation still being very active.
Yeah, both deregulations. You can't take one in isolation of the other. You have deregulated pump prices, you have deregulated Forex. The two are co-joined. You can't have Forex moving in the official market from less than 500 to close to 800 and expect pump prices to stay the same. So government is coming out to say we will no longer raise pump prices. They are actually saying we might be back to the subsidy regime. Because if you want to do away with subsidy, pump prices must be reflective of the prevailing exchange rate.
All right,
so the main point here is that the populace are groaning under the weight of higher pump prices and of higher naira that they have to part with for the exchange rate. So rather than coming out to tell us, what the spokesman for the president or for the government is saying, is largely in denial of reality. There's no way you can assure us that pump prices is not going to go up when exchange rate keeps falling. If exchange rate falls, pump prices must go up. So what the government will be coming out to talk to us about is how they will stem the tide of the devaluation.
I hear you, Dr. Teriba.
Yes.
I just want to call your attention to the meeting that held between the president and acting CBN governor. I think it was the day before yesterday, where they talked about certain new measures by the Apex Bank to, help keep Forex in place. Just this morning, we are hearing that FX speculators are posting heavy losses as Naira gains 55 Naira against the dollar. Don't you think that's also the effort on government side in all of this?
Well, at the end of the day, it's not about what you say. It's about what happens in the market. It's not about, we are not here about wishful thinking. Unless the government comes up with liquidity injection that will show up reserves, the naira will continue to fall. It's like you doing a surgery on a patient and the patient is hemorrhaging. Do you have enough blood in the blood bank to stabilize the patient? So you can, GMT can say whatever he likes, unless the reserves show up. Everybody can see that the reserves are low. And the government has the power. They have the sovereign power to make interventions that will show the reserves up. That's what we should be talking about now. It's not about the central bank government coming to warn speculators. It's about the government coming up with reserves. If reserves move up to $50,000 now, speculators will be burnt. If reserves keep going to 30,000 or drop below 30,000, I'm sorry, you are giving the speculators an open field to do what they want with the exchange rate. So it's not about telling us pump prices will not go up. If exchange rate keeps falling, pump prices must go up. If they don't, subsidy is back. So let's now get a conversation around how Nigeria can boost reserves. And Nigeria is extremely well placed to boost reserves.
So I was just thinking that, there's a point in the fact that the president and the CBN are working on reversing the current momentum in the foreign exchange market, and also saying that if it's indeed, accurate that Naira has gained 55 Naira against dollar, that perhaps government's effort in this regard is yielding some fruits. But let's bring in former presidential candidate Dr. Victor Okhai into this conversation as well. You hear the conversation as regards, what it means for the downstream sector to be deregulated, the fact that market forces now should determine the price of petrol, and that indeed the federal government has lost its control over that market. When you look at this vis-a-vis the president's statement yesterday, what are your thoughts in this regard?
Well, first of all, thank you for having me. Obviously, it was a political decision because what has happened obviously has made the government a bit uncomfortable. I wouldn't say jittery. Public opinion is clearly not in their favor. I would have expected that even if there was going to be, what you call it now, the subsidy removal, what should have happened first would have been to ensure that, yes, I know that Buhari's government had already removed subsidy starting from June 1st or thereabouts. But what would have happened is that they would have ensured that Dangote refinery actually took off, and the proper repair of the other refineries to take care of, the shortfalls and make sure that we can actually regulate what the prices are. But what has happened right now is that, there's a free fall. There's nothing anybody can do anymore. And coinciding it with what has happened in the foreign exchange market, what the government is just doing is just being reactive, not proactive. I don't see how they can, first of all, let me talk about, because the two are almost inextricably tied together, the dollar and foreign exchange. It's the same globally. It's not just in Nigeria. I mean, the dollar and the cost of petrol and petroleum products, they're tied together. So there's nothing that they can do about it right now, because even with the regulation, even with what the central bank governor or acting governor, whoever it is, has said, the truth is, I can tell you that Nigeria of today, if you flood that market with dollars, there are people waiting to buy up all those dollars. In a matter of less than a week, they'll buy up everything and there'll be scarcity of dollars again. People are now investing and hedging their investments in dollars, not in Naira anymore, which is why there's a free fall. And, we don't have enough foreign reserve to wage or to defend the dollar. You know, so these are the challenges we're having right now. The government will have to do more than what it is doing. For petrol, until Dangote comes fully on, and until the other refineries are fully repaired, the government cannot, on its own, as long as private individuals import fuel, there's no way they can regulate it. They may have to, well, they have talked about partial deregulation right now, or the temporary, what do you call it now? Subsidies. They may have to go back to that regime, but even if they go back to that regime, the cost of dollar will certainly not bring the prices down.
All right.
So we will be where we are, and it might get worse.
So, you know, Dr. Teriba, it's understandable that government at this time, it's just about 79 days into office of this administration, Dr. Teriba, and it's understandable how government cannot want to feel helpless in such a situation like this when Nigerians want an intervention, you know, when the cost of living is, you know, skyrocketing. So, for instance, you heard the acting CBN governor say just recently about how he thinks that the exchange rate in the official market has been stable or relatively stable, and he was blaming the instability on speculative demand by people. Isn't that something you think government can do to change the reality? If we stabilize Forex, then, you know, one way or the other, it will impact positively on how much Nigerians pay for petrol.
Is that question to me?
Yes, Dr. Teriba.
Right. It's not about talking now as we speak, because whatever you say, as long as the market, as the last commentator made, is going on a free fall, it's not about what you say, it's about what you do. You know, there are opportunities for open mouth policy. There are opportunities for open market policies. Bring on the reserves. Nigeria is extremely well placed to invoke liquidity injection in a matter of weeks, in a matter of days, in a matter of months. We have the assets. And I love the headline that I read in one of the newspapers over the last 24 hours, that government is going to partially sell some of its equity stake in about a dozen or dozen and a half entities. Government should look for the reserves now. You are not a company, you're a country. You have sovereign powers. Bring reserves onto the market. 30,000 is no comfort to anybody. It's not about speculator. If you have foreign exchange and you have seen how the free fall has been happening in the last 2 months, you want to cover your position. So it's a crisis of confidence. People are losing confidence in the ability of the central bank to stabilize the market, and the government shouldn't leave the central bank alone. The central bank at the end of the day is an agent of the government. The government should do whatever it can to find the forex injection that will stabilize the market. You have a patient that is hemorrhaging, and you shouldn't look beyond the blood bank. So if you need to call for blood donors, our president has traveled outside of the country. He had met with the diaspora. You can ask them what they can do to, contribute the liquidity that we need, maybe open opportunities for them to invest in sectors where the government holds 100% equity, talk to foreigners, liberalize, if you like, the rail sector, the power transmission sector. Let equity come in, especially dollar equity, and the market can be stabilized. Nigeria is not in any situation that you cannot solve within a week or two or within a month. But the answer is going to come from how much equity you are able to raise, particularly foreign direct investment, cross-border equity. So right. I wish, the president well, I wish the country well. Nigerians are suffering from the weight of the, unification of
Dr. Teriba, talking about what government is doing as against what it's saying, we have news just in talking about relief for the Naira and the fact that the NNPC Limited just secured a $3 billion emergency crude repayment loan from Afrexim Bank. And we understand that this is going to, according to the NNPC, this commitment letter and term sheet for an emergency $3 billion oil repayment loan will provide some immediate disbursement that will enable NNPC Limited to support federal government in its ongoing fiscal and monetary policy reforms aimed at stabilizing the exchange rate markets. Just before I get to Dr. Okhai, what's your reaction to this latest news? $3 billion repayment loan, and it's aimed at stabilizing the Naira.
Excellent news, positive development. We should do more than that. We are a 480 billion economy. 3 billion is good news, but we are looking for not 3 billion, we are looking for 30 billion. So if NNPC can bring that on, what is the central bank bringing on? What is the Ministry of Finance Incorporated, MOFI, bringing on? So if this is a sovereign issue, at the end of the day, central bank is just an agent. So this is a country issue. This is right at the table of the president. We need to find the reserves. Nigeria has diaspora who could, at this time, India in this situation that we are now in 1991, they issued diaspora bonds in a week. They got $4 billion. So if you can issue diaspora bonds, do so. People believe in the President Tinubu, and he has contacts all over the globe. He should do a clear call now, issue a diaspora bond, or offer choice national assets and say, come and take 1% equity, come and take 5% equity.
All right.
We need to be looking for reserves in the order of $50 billion or $100 billion.
Let me get Dr. Okhai's input
There's no conversation
into this very quickly. So the Kenya government on Monday reintroduced full subsidies to curb soaring prices of petrol, kerosene and diesel in that country. And many have started talking about what the implication of a reversal would be if that happens in Nigeria. But let me get your reaction to this $3 billion emergency crude repayment loan from Afrexim Bank and how optimistic you are about this move.
Is that me?
Yes, Dr. Okhai, please go on.
Okay, so I think that like I said a little earlier, we are mostly reactive rather than being proactive. Maybe it's too early in the day yet to say that the government should begin to think about production and those things that will help us to earn foreign exchange. But whatever we do now to hedge, the Naira with the dollar, whether through loans or whatever, can only be a temporary measure. Like Dr. Teriba said, there is a lack of confidence right now in the central bank and in the managers of our economy. If you bring out $3 billion today, there are people ready to mop up that money and save up in dollars, not in Naira, because there's no confidence anymore in the Naira. So whatever it is can only be temporary unless we begin to think about more permanent and long-lasting sustainable solutions. Like, I'll give you a small example. It may seem small, but that's how we neglect those things that can make a difference to us. AGOA still subsists. I think it started from the time, that is the African Growth and Opportunities Act, which I think it was the Obama administration then that did it to help Africans, and Nigeria was one of those countries where our people could export textile products and fashion products to the U.S. without any import duties. If government had pursued this policy and done everything it can to encourage the growth of our local textile and fashion industry, that sector would have grown. Even if you go to a place like Aba alone, I want to use that as an example, and then decide to make that a hub, that sector would have grown and would have been contributing to.
We may have lost connection with Dr. Okhai, but I want to say a big thank you, Dr. Victor Okhai and Dr. Teriba, for your contribution on the program. The president emphasized yesterday that his policy of deregulation will continue to be implemented and that no single entity will be allowed to control the market. We're looking forward to see the impact and the implication of this new move by the federal government. Thank you, gentlemen, for talking to us on the first 100 days. That's our program today. You can watch a repeat at midnight and at 6 a.m. tomorrow. I am Nifemi Oguntoye. See you again at the top of the hour.